Hello, welcome. Thanks for joining me. This is just a quick little lesson I wanted to share with you guys. If you want to just take a quick second and read this risk disclosure, remember trading is risky and past performance is not indicative of future results. All right, so this is a quick little trade, and a lot of you may be familiar with my PPS indicator or the high closed doji, and more importantly, person's pivots. And you'll notice that these lines are color coordinated. This is blue, this is gold. That's a moving average of pivot. That is the pivot. When the blue is a positive, meaning it is a greater value than the gold line, the market's deemed to be in a bullish mode. And what we look for is tests of support, and then we look for buy signals. So this is an automated system that generates trades based on the criteria that we set forward. It's stagnant lot size. As you can see, this is just 2 lots. It generates a trade by getting in, and as the market was moving up, it actually exited the trade. As you can see, it says LCC. That stands for a last conditional change breakdown, and it took the profit. All right, so let's study that setup a little bit more, because this is really dynamic in what we've been utilizing for years, and in fact since my first book came out back in 2004. For day traders in the E-mini S&P, here's just another little function of what we try to utilize in an automated system. And I don't know how many of you guys have tried to trade the markets and you're staring there. If you look at this, we've had a dynamic shift in what we trade, how we trade, where we trade, and more importantly, when we trade, right? I mean, here's the European session, which kicks off into high gear, generates a nice steady trend, and then we come into the U.S. session, and what do we get? Chop and slop. All of a sudden, we come into the next day. Another situation. Again, European session starts off, kicks off a nice little drive with a long position, gets in 2 contracts. The system does what it's supposed to do. It gets out a percentage, 50%, and then it trails the stop, and then it gets out, and then it gets back in on the long side, and the same thing, trails the stop. As it is currently breaking down into the after-hours session, it went short a couple contracts, and that's what this system is designed to do. Not all trades are winners, but it, as you can see, gets out of those losers pretty darn quick. Now, this is something that is a product and a program that I think a lot of people are learning to use and accepting more and more because of the very nature of what's been going on with this business. You know, in the next minute, actually 49 seconds, I'm going to share some more tidbits of trade insights with you. First, I mean, let's take a look at what automated strategies are all about. I mean, trading systems and algorithmic strategies. The trading's been around for 30 plus years. However, today it's more advanced across most asset classes and around the globe. I mean, we have traders now creating systems from Prague to Germany to England. I mean, all over the world. Hong Kong, we've got it. All traders, Mexico City, Colombia. I mean, all over the world, everyone's involved in automated systems. I mean, there is a big difference between the days of old versus now. Let's take a gander. What's your biggest frustration been in the markets as an individual trader? I mean, you sit there, the markets are starting to move, and you want in, but you miss the bid, and the market takes off without you. That's happened to a lot of us, right? That's very frustrating. The markets are flat for hours, and that's been what we've been dealing with in 2018, except for in equities and earnings reports, right? It's like this massive binary event on earnings. But for traders that have been in the market day in and day out, the markets, you've seen it, they're flat for hours. And the minute you walk away, cup of coffee, go for a bio break, you come back, the trigger that you've been waiting for happens and you're not in. Or you get in, you get stopped out, you get in again, and then you get stopped out again, and then you say, forget this market's choppy, I'm not getting in anymore. And then finally one more trade happens and you don't get in, and that's the one you should be in, and you're not. Right? Your confidence becomes so crushed you don't want to take risks anymore. You buy, you get stopped out, and your signals say, well, now that you're stopped out, you need to reverse, go short. And you don't. And that was the big winner. These are the types of market movements and characteristics that we've been going through this year. Let's take a quick example and see what it is that we can learn to get better at this. So the example that I was giving, we see a nice little setup and we get short the market and then we get stopped out. And you say, well, that didn't feel right. And yet some people would say, well, I'm not going to take any other signals, or your system says reverse and go long. And as you can clearly see, big time. Small loser, big winner. And that's what we need as traders. This is an equity curve, and you can see that the equity curve has grown because the trade was a winner. So there's an algorithmic sequence and something that everyone has an opportunity to get their hands on and learn how to apply strategies and automation and get back on a level playing field. Let's take another look. Take 30 more seconds and I'll show you this next little technique. All right. Back in April, early May, I introduced a way of trading a volatility product, the VXX. And this is not a leverage, it's an exchange traded note. But if you take a look, real simple, you can clearly see the trades that have been taken. Winning trades are actually marked by blue trails. Losing trades are in red trails. And this is an equity strategy curve. So you can see there's little loser, little loser, little losers. I mean, these things are frustrating, right? Well, that's part of trading. We need to trust the system. We need to trust the signals. And, you know, when you get these nice sell-offs, you can say, hey, that makes sense. Currently, that the particular trade is still active on the short side. So looking at this market and teaching people, listen, you are going to be having to probe and test the market, and you're going to have to take every signal. And I think that's what a product will help people to understand their overall performance. This actually, let's take a look at the performance graph. I mean, this is absolutely spectacular, what everyone wants to see. A nice, smooth equity curve. Yes, period of slow or inactivity in the profits, but for a very short period of time. But overall steady growth. These green dots mean new equity high in performance. That's exactly what we want to see. So as far as a trader is concerned, our number one job is to do this: make money. How we do it, that's what we need, the confidence and the education to learn. Some people want to just buy and hold stocks or do option strategies, and others just want to make money any way they can. And that's what I'm here to help you learn. Once again, let's take another 30 seconds and study this chart. This is gold. It's a 60-minute chart, and again, that's the equity curve. Is this thing trading huge amounts of positions? No, you can clearly see two lots. It's trailing the stop. It's only trading two lots. Its equity curve for the year, not bad. Let's take a look. For the year, nice steady upside. It's not without fault. It has had a period of some choppiness, as you can clearly see right in here. Had a peak performance, a little drawdown, peak performance. It got a little choppy, and then it's been doing nothing but on a steady equity curve for the year. Not bad for gold, considering the fact. Let's take a look at the characteristics of gold's performance year to date from a buy and hold standpoint. So, for example, if you just bought gold, you'd be up 7.5%. Trading it with an algo system, you'd be up 1,133%. So a far cry. And in addition, you've only been in the market half the time, 5 months, by trading it actively versus 10 months buy and hold. So you can clearly see there's a disadvantage by buying and holding sometimes, or having something that's able to get you in, get you out, and be able to trail your stops and allow you to profit in the market. That's one of the key elements. This is a drawdown feature. I think from peak to trough, everyone can look at that and say, not bad from a performance standpoint. The worst peak drawdown here over time. So again, it's not that it goes without perfection, but you could clearly see that you're not going to miss trades. And let's take a look at that, and that's the key element here. Position sizing is one of the major important elements of the market. This is not a system that sells 4, then 8, then 12, then 16, and doubles up. It's only trading 2 lots, consistently taking money out of the market. And as you can see, it went long, it got stopped out, it got another loser, got in, got chopped up, got right back in, and made money. Got in, made money. Got in, made money. Got in, lost a little, went back in, got stopped out, and that's the bottom line. So that's what it's supposed to do. When it wins, it allows it to do what everyone wants. Let the winners ride. And when it's wrong, it just gets out based on the criteria. And that's what an efficient system and methodology is supposed to do. Let's look at this a little bit more. Now, if we were to create this all by ourselves, we need to know what the trigger is, what our risk factor is, our exit strategy. We'd need to know exactly our position sizing. Very important. The length of stay. How long are you in that trade? The trade session. Are you trading 24 hours? Are you only trading from 8 to noon? Are you trading from 2 in the morning to 8 in the morning? The European session active time frames. Do you have a trailing stop feature? Are you going to ignore the trade if the risk is greater than, in terms of percent, than the average loser? So let's say you have a system that has the average loser's $300 and a trade pops up and where the stop needs to go is $900. Wait a minute. Your average loser's $300 and you've got a trade here it's going to take a $900 hit if it's wrong. That's the kind of trade you want to filter out and you want to ignore and write that into your code. You want to ignore double signals, meaning I get long, I get out, and then the very bar I get out, it gets me in again, and then the market pulls back. So you want to watch that. You want to trade alternate trade signals. If it gives a long and the trend is up, and then all of a sudden it reverses and gives a trend reversal, do you want to take those alternate trades? You want to kind of ignore sell signals near support and ignore buy signals near resistance. After all, you want to exit after X amount of bars if there's no change in price. So let's say I get long the market. Here's a bar chart. The very next bar, I get in the trade. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 hours go by. Nothing happens. I want out of that trade. You know, because if it has the momentum and it's supposed to go up and it doesn't, usually markets that are supposed to go up, they go down. They don't move. And then again, we have a change of stop if the profit, and that's why this is highlighted, average true range, if it changes by X percent. So these are some of the trade system considerations that you need to go in. A very viable product like the one I'm sharing with you. Inputs and patterns. What goes into it? Well, price, we have moving averages, we have pivots, my favorite, of course, with Person's pivots, Fibonacci, indicators, we have volume. Trend, we have variable weighted average price, volume weighted average price, bid and ask, percent change. You got conditions like commitment of traders, advanced decline, volatility based on average true range, and seasonality. So there's a lot of inputs that we would look at. But really, if you think about it, how amazing would it be if you had access to a prop firm's trading system where you didn't have to hire a PhD, someone to code and say, you know what, I want not a fighting chance, but I want better than a 50-50 chance at beating the markets. I want able to optimize my system that's applicable across multiple markets in various time frames. I want to take a 5-minute system. I want to take a 20-minute system. I want to take a 60-minute system. I want to trade Apple. I want to trade E-mini S&Ps. I want to trade bonds. I want to trade them on a 15-minute basis. Well, if you knew what the average and above average risks were in a system, and if you knew as long as your internet was connected, you could trade fairly against or with the algorithm professionals. that's what we've been introducing people to. I mean, here's an equity curve on that volatility index. And I'm here to tell you, a dynamic product to not just trade, but also to utilize as an individual looking to beef up their portfolio. TradeStation was a pioneer in trading systems, and defining in a trading system what works as well as what doesn't is probably more helpful. And the reason is this. As they say, you're only as strong as your weakest link in the chain. Identifying the weak link in your system, and that's going to help you to determine how to improve your trading method. If you take a look closely at this performance graph, you'll notice that it's fairly smooth in the sense that it goes up, and it doesn't do this. It's not erratic where it still trends up, but it has a lot of massive drawdowns. The drawdowns are, periods of inactivity in trading, not destructive. So if you joined a system and it's in a period of lull, it's not like it's going to kill you in a massive drawdown and you run out of equity before the thing starts kicking into high gear again. By the way, this goes back since the beginning of this product in 2010. So this is the life of the history of this product based on a $100,000 starting account. And as you can clearly see, it's up over 8,000%. It's a pretty decent product to trade. So many systems charge a lot of money. And why is this particular system so special? Because many systems charge a monthly fee anywhere from $89 to $350, and they control your position size. You can trade one market for $100 a month, and you're only going to get maybe 30 signals, or maybe it's $150 a month, and you're only going to get 30 trades a year. Well, that's okay, but if you're paying $150 a month to only trade one contract 30 times a year, is that really efficient? And is that in your best interest of if you wanted to learn how to trade and manage your money correctly? So those black boxes, you can't optimize, or as we like to say, maintain the system. Maintenance, just like a car, you got to get an oil change. You got to maintain a system. You're looking for profit targets in a market that's only moving 5-10 points a day. What happens if we get in a market that moves 10-20 points a day? Shouldn't you increase your profit potentials? And so that would be a difference of what we call maintaining by optimizing the system for the current market environment. And that is what an algo optimizer allows you to do. It allows you to custom tailor the time sessions you're trading. It allows you to auto trade or manually trade. It allows you to trade the quantity you want to trade, the markets you want to trade, and here's a killer. It allows you to trade either long or short only, or you could take both long and shorts. That VXX system, if you only took, and I want to share that with you, so let's take a minute and look at that a lot more closer. So this is the system trading the VXX. It's a volatility. When the stock market goes up, the volatility goes down. So this thing is destined to always go down. So wouldn't you want to trade just the short side? Right? And you have almost a 2-to-1 profit target. And this is a system just taking shorts. It has over an incredible rate of return. So my point is that when you are looking at a trading system, to choose and be able to take the settings and go, I only want to take short trades only on this, and get a performance graph just as smooth as silk. Now, you obviously, by taking buys and sells, you'll get more profitability, but you're going to get fewer trades, less heat, less drawdowns when you can select. Now, let's say, for example, the market, we go into an equity bear market eventually. Then you would want to turn off the shorts on a product like this and only trade from the long side, because volatility is going to expand. And so your system is only going to capture the long trades. Wouldn't that be something that makes a lot of sense? And to put it in the hands with the right individual, with the right training, this is a powerful trading program. So when we put together the different trades, as I was just pointing out, here is a situation which allows you to do several things. Number one, capture trades, long, scale out of half, and guess what? It gets out of the other half here. Long 2 gets out of 1, and now it's zero balanced. Gets into 2 contracts, gets out of 1, scales out of the other. And it's flat at the end of the day. Equity curve, straight up for the month. Not bad performance, as well as taking the right signals. And that is what this is about. Do you want to have a product that can get you in the market and also define your risk and then just trail the stops? That is what a trading methodology is all about. But a great trading methodology allows you to be able to be in control on how you trade, what you trade, when you trade. So that's what I was referring to by taking long or short, or taking both long or short. Now, how to execute trades? Well, you can choose optimize setting for the time frame you wish to trade. So in other words, I want to trade a 15-minute basis, a 5-minute, a 60-minute, or I want to choose to just alert me that there's a signal, and I'll make the determination whether I want to enter those orders myself. So you can manually select if you want to take the trade or simply run it with alerts. And you can set up strategy positions to alert of new trades. So this is a revolutionary high-tech solution for the retail trader. This is the ultimate algo optimizer program. It's been 8 years in the making. We've done a few webinars on it, and we haven't really done a strong introduction to the general public because it's really been gathering momentum on its own by word of mouth. So what's neat about the product is that the stops and risk management's defined, and something I can share, I'll share that with you right now. Let's get into that just a bit. So in the function of this feature, we have exit strategy. We can start a trailing stop function that when a market gets near its projected profit target, the trailing stop kicks in, and you can see it has a scale out ratio. One other function that's just really dynamic is that it allows us, as I've already mentioned, to trade during certain times. Start this for the European session and end this before the U.S. session open outcry concludes. Take no more trades before that time or after that time. We can take and slice this up into multiple time frames if we want. Trade between 2 and 5, trade between 9 and 10. So we have, or exit end of day. Here's another function that's dynamic about this. Position calculation method. Now I've got it selected at number 3. Number 3 is what? Position size. It's only taking 2 lots. It's making a lot of nice profits on this particular setup, only taking 2 lots. We can use a position value if you only wanted to say, I've got $10,000 on my account. I'm going to switch the position calculation method to number 1. Take as many contracts as possible or shares of stock with $10,000 in my account. Figure it out for me automatically. And it will do that. So position sizing is a major important element in a trader's arsenal, is understanding how many positions to have on. And that's one of the major functions of this product, is that it allows people to control when they trade, how much they trade, and yet it'll calculate your position sizing for you automatically. So when I mention the stops and risk management is defined, choosing your position size based on your capital, the leverage, or per trade risk, the time in a trade. Hey, what is the average length that trades make money? Is it 10 bars, 5 bars? Is it 2 days? And you get to optimize that and find out a little bit more about the system itself and create those settings. And you can control your optimization when volatility changes. And the products that you can trade is applicable for stocks, ETF, and ETN, and futures markets. So I'm going to share with you how you can get more information from our website. based on this product. Obviously, you can look at introduction to our Doji and other products that we've put out on YouTube. But let's take a look at where you can distinctly find more information on this product. All right, so you go to personsplanet.com and you go right up here to Persons Indicators. That's number one, where you want to see this box right there. So you're going to go to Algo Optimizer. Algo Optimizer. One click, and there's the information on the Algo Optimizer. Now, this is a couple little things, another little system that we help develop for traders using Tesla. So for stocks, I mean, can you imagine if you're an option trader and you get some signals, rather than take the trade in the underlying stock, you can take a stock replacement in options. So it has an insane opportunity there for other aspects of trading. Let me also point one other issue for you. This product comes with my complete lifetime. You need the lifetime package, which is an incredible product to learn how to find relative strength in the market, classifying what sectors are breaking out, what stocks in each sector are moving. This is another aspect of how to utilize a true professional plan and really uncover some incredible opportunities other than just automate your trading. Let's take one look into this real quick. So here's a couple things that, including this week, which we pointed out to traders that Twitter, I mean, it hasn't done anything for quite some time, but all of a sudden this week we just started to see the breakout, and that was because we had a nice weekly buy signal and a daily breakout. More importantly, my volume indicator down here was starting to show, and this is a specialized proprietary volume indicator based in terms of percent change, and this is a relative strength tool that's available for the users of the person's lifetime. This puts down in categories of what buy signals are on a daily basis, a weekly basis. This gives you buy and sell signals on what's changing for the month, and something that's very unique and special, the quarter. So you get quarterly pivot analysis as well. There's a scanner. There's so many different functions here that whether you're looking to capitalize on enhancing your portfolio or just trading the market, not only does this product cover everything from A to Z, just like a professional money manager would have. And in fact, we do have professional money managers using this product. Here's one of the things that I would also point out for you guys, that it's an incredible benefit. Over here on the website, under member login, let's go over here and I'll just type in my email and password pops up automatically, and we're going to go to courses, and the first thing we're going to do is we're going to, indicator training videos, Algo Optimizer right there. And so here is, not only do you get a manual for quick reference, but we have monthly meetings, support for our users. We also have video instructional tutorials. And what's neat about this is that if you look at some of these tutorials, these are a question and answer session that we had. People wanted to know, how do we optimize for best trading times? You'll also, if I may, just scroll down just a little fast here, and just to share with you, we've put together different optimization settings for our traders that they can start to develop their own trading system based on proprietary settings that we've instructed through the video. So there's a 15-minute day trading system that's given in the E-mini S&P. We have also, for shorter term traders, there's a 5-minute day trade. Here's a 5-minute system in a day trade on the ES. If you're a ETF trader or an equity trader, a 90-minute spider that's more for swing trading. We've had the 60-minute crude oil study We have different settings for how to use and turn on and off and back test each different function. More importantly, we also have a model that we gave out settings for the parameters on an Amazon 60-minute swing trade model. And the best of all is the volatility exchange traded note, the VXX, based on a 60-minute time frame. You know that system that I shared with you with that equity curve, that smooth equity curve that went from left to upper right, with that beautiful rate of return? Well, guess what? Those exact settings are given out as a bonus to those who get this product. So you're not just getting something and not seeing support. You're getting something with back test results. You're getting a product that teaches you how to optimize and become your own hedge fund professional manager by getting a product that has been created with years and years and years of experience. So that's what's really exciting. If you can imagine getting into a VXX program, for example, and you look at this and you go, wow, let's look at that performance one more time. And you say, is that something I want? Take a look at this periodic return. Periodic return over the last 7 years. Every single year, starting account is 100,000. So even if you only started with 10,000, look at the rate of return. On a $100,000 account, the net profit 65,000, 56,000. This is not cumulative. This is just starting balance. Gosh, if it was cumulative and we reinvested the profits, it would be off the charts, right? A double right there, 100,000, 90,000. The last 2 years in 2016, 89,000. 2015 was slightly off, only 55,000. And this year right now in 2017, maybe because of the nature of the market in this way we've traded, it's only up 54,000 for the year. Not a bad net profit on a program that is not only teachable but auto executable, and that's something that we wanted to share with you. So this instructional video was designed to help you understand what's out there for you for the taking. I mean, if you're sitting there saying, I've tried everything and I've done options and I've done this, and it's now time to move into auto trading for yourself and to really get the right training and get the right profit and get the right efficiency use of capital, this is where you want to be, and you'll be under my wing, John Person. I hope you enjoyed this tutorial, at least gave you insights on a little bit better way of how this is working for our community and our traders. I thank you, and I wish to see all of you succeed in the years to come, especially for those who are able to take advantage of this incredible product. Thank you.